Hello and welcome everyone to Gold Asset of the Day for the 22nd of December 2021, presented by myself, Phil Carr, at the Gold and Silver Club. Now, I just want to take this opportunity to wish you all happy holidays, wishing you a fantastic Christmas and New Year's. This will indeed be the last commodity report of 2021. So with that, we do wish you good trading, and let's get right into it with respect to gold. So firstly, in the last week, hedge funds and money managers, their overall net long position on gold currently sits at 68%. The only other commodity with a stronger net long position right now is in fact crude oil. And with that, over the last week, of course, we did see that slingshot move higher for gold last week, breaking back out to 1,815 US dollars per ounce. This time last week, we talked you through the expected range on gold of 1,760 up towards 1,800 US dollars per ounce. We hit that exact range last week, closing last week just below 1,800 US dollars per ounce. Now, over this week already, we've seen a 2% breakout to the upside for palladium. We've seen platinum prices up 1%, silver prices up 1%, bit more range bound choppy price action here for gold. Now, getting into the specifics, essentially right now with gold, I would suggest right now, given the time of the month that we're in, getting towards Christmas now, then into the last trading week of December, then as we move into Q1 of 2022, any price right now below 1,785 US dollars per ounce, I would perceive that as a buy opportunity right now with gold. You have to remember, just at the end of last week, we spiked out to 1,815 US dollars per ounce. We're starting to see the dollar roll over. The gold to silver ratio has now broken down to 2-week lows. So silver is essentially in the short term outperforming gold. We've already seen breakouts on platinum, palladium, and also silver, which we are capitalizing on via the metals right now. And essentially, we've seen a lovely breakout move after last Wednesday's FOMC statement as well here for gold, and also that normal range bound price action you get at this time of year, which gives you opportunities to buy in at the lower end of those ranges. So again, any price at the moment really down towards 1,785 US dollars per ounce or lower for gold, I would perceive as a buy opportunity at the moment. Then of course, later on this week, we do have a number of news items that you need to keep an eye on as well. We've got the GDP data, we have the PCE data, the Fed's preferred measure of inflation, which can be a catalyst again for some massive moves in the market. Bear in mind as well that markets will be closed on Friday for Christmas Eve. So really over this week, in order to capitalize, you want to make the most out of Wednesday and Thursday's volatility, which we're expecting some massive moves in the market. Then, of course, we're starting to transition into that final week of December, which as well has a very specific cycle to it that you can capitalize on massively. Now, what we've tended to see a lot lately is traders get too bearish each time the metals are pulling back towards their swing lows. They either capitulate out of their position or they turn bearish, and then they get stopped out of their positions with the subsequent slingshot moves higher that we're getting. So essentially, we're just seeing range bound price action at the moment on the metals. That's what you want to capitalize on, the current range that we have within those metals. Then there's some very specific cycles that they move into as we go into Q1 of 2022, which you definitely do not want to miss out on. And of course, we want you to finish the year strong, not get chopped up like all of these technical traders recently that continue to buy the highs. They sell and capitulate at the lows. They're getting chopped up a lot with the current market volatility, or they've got no positions on at all. And that's not the time of year where you want to have zero positions on, because there's so many opportunities to take advantage of. Just to give you an idea, we've established 16 positions just over the course of this month so far. So I hope that gives you a bit of insight into what we're looking to do here in the markets, how we're looking to capitalize between now and the end of the year. And of course, if you would like to join the research-driven approach to the market, make sure you ditch those technical indicators, because otherwise you'll just get crushed in these current market conditions. You want to be utilizing statistics, market intelligence, join a community of successful traders, learn the professional research-driven approach, and that's where you will, of course, be learning the daily, the weekly, the monthly, the quarterly cycles for each commodity. Alongside that, the intermarket correlations, the ratios, key areas of liquidity, alongside that, the sentiment in the market, capital flows, key news items which will have big impacts, creating those impulse moves that you can capitalize on very quickly. Alongside that, then the fundamentals in the market, macroeconomics, of course, the key geopolitical drivers, and alongside that, how the hedge funds, money managers, banks and institutions are positioned in the market. That will help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. Just clicking the link below today's report in order to join our professional mentorship program.